Market crashes are completely normal, and they're actually healthy. If you zoom out and look at a 5-year or 10-year chart, every crash that once seemed massive now looks like a small dip in a long-term uptrend.
But 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better. And I hope it goes down when I buy it because I'll buy more. But I'm in a game that's very, very, very easy if you have the right lessons in your mind about what you're buying. I'm happy when stocks are going down. I'm happier when stocks are going down because I can buy more of them with the same amount of money. There's times when you get a chance to act and do something really intelligent. May happen once every 10 years, or once every 20 years. Depends on what field you're in, where you live, what you know, all of that.
The stock market is crashing again. Everyone is panicking. The media is screaming, recession. But what if I told you this is actually the best news you could hear? Warren Buffett once said that when stocks go down, he gets excited. Why? Because great investors know that a crash is a once-in-a-lifetime opportunity to buy at a discount. Today, we're breaking down why this crash is actually a golden opportunity, how the greatest investors take advantage of times like these, and most importantly, how you can do the same. Stick around until the end, because I'll share 3 powerful strategies to make the most of this market crash. Why market crashes are normal and healthy. The stock market is falling, headlines are full of panic, and investors everywhere are worried. But here's the reality. Market crashes are completely normal, and they're actually healthy. If you zoom out and look at a 5-year or 10-year chart, every crash that once seemed massive now looks like a small dip in a long-term uptrend. Take 2008. The market dropped nearly 50%, and people thought it would never recover. But today, it looks like just another bump on the way up. The same happened in 2020, and yet, the market bounced back to reach new highs. These corrections help prevent bubbles and bring stock prices back to reality. If the market only went up, prices would become inflated, leading to an even worse crash later. A pullback allows the economy to reset and grow sustainably. Warren Buffett has said many times that he gets excited when stocks drop, because it means he can buy great companies at a discount. When your favorite store has a sale, you don't panic. You take advantage of lower prices. The stock market works the same way. So, instead of worrying, take a deep breath. Market crashes are temporary, but smart investments last forever. Stay patient, stay invested, and in the long run, you'll be glad you did. What's happening in the market? So, what exactly is happening in the stock market right now? Why is everyone panicking? Over the last few weeks, we've seen major indexes like the S&P 500 and the NASDAQ take a nosedive. Headlines are filled with fear, talks of inflation, interest rate hikes, and even a potential recession. Investors are dumping their stocks and portfolios are bleeding red. But here's the thing. This isn't new. The market has always had cycles of ups and downs. And every time, people panic. Yet, every time, the market eventually recovers. In fact, some of the greatest fortunes in history were built during downturns like this. The question isn't whether the market is crashing. The real question is, how are you going to respond? Are you going to panic like the crowd? Or are you going to think like Warren Buffett and see the opportunity? Because history has shown us that the best time to invest isn't when everything looks great. It's when everyone else is afraid. Warren Buffett's mindset. Why he loves market crashes. If you've ever wondered how Warren Buffett reacts when the stock market crashes, the answer might surprise you. He gets excited. Buffett has said it many times. Be fearful when others are greedy, and greedy when others are fearful. But what does that actually mean? Think about it. When stocks are soaring, everyone wants to buy. Prices get inflated, and suddenly you're paying a premium for the same company that was cheaper just months ago. But when the market crashes, those same companies go on sale. Buffett sees a market downturn the same way a smart shopper sees a Black Friday sale. He once said, "Whether it's socks or stocks, I like buying quality merchandise when it's marked down." In other words, when stocks are cheaper, he buys more, not less. Take the 2008 financial crisis. While the world was panicking, Buffett was making billion-dollar investments in companies like Goldman Sachs and Bank of America, moves that made him billions when the market rebounded. Right now, we're seeing another market decline, and while some people are selling in fear, others, like Buffett, are buying the dip. So the question is, are you thinking like the average investor, or are you thinking like Warren Buffett? How to spot buying opportunities in a market crash. Alright, so we know Warren Buffett sees market crashes as opportunities. But how can you do the same? How do you know what to buy when everything is falling? Buffett doesn't just buy any stock that drops. He looks for great businesses at discounted prices. So, how do you spot them? First, focus on companies with strong fundamentals. These are businesses that have been profitable for years, have little debt, and generate consistent cash flow. Think of companies like Apple, Coca-Cola, or Amazon, businesses that have been through past crashes and always bounced back stronger. Second, look at stocks with a wide economic moat. Buffett loves companies that have a strong competitive advantage, meaning they dominate their industry, have loyal customers, and can survive tough times better than their competitors. Third, check valuation. Just because a stock has dropped doesn't mean it's a good deal. Buffett uses a simple rule. Would you still buy this company if the stock market closed for 10 years? If the answer is yes, that's a strong sign. And finally, stay patient. Buffett doesn't rush in. He waits for the perfect moment when stocks are undervalued. He once said, "The stock market is a device for transferring money from the impatient to the patient." Right now, the market is full of fear, but as Buffett would say, this might be the perfect time to buy great companies at a discount. History proves that markets always recover. It's easy to feel overwhelmed during a market crash, seeing red numbers everywhere, hearing news about economic downturns. It makes you want to run for the exits. But here's the truth. History shows us that markets always recover. Always. Let's take a look at past crashes. The Great Depression in 1929? It was devastating, but the stock market eventually recovered and went on to reach new all-time highs. The crash of 1987, also known as Black Monday, saw the market drop over 20% in a single day, but within 2 years, it was back stronger than ever. Even in recent times, the 2008 financial crisis wiped out trillions of dollars in wealth. People thought the system was collapsing, but if you had invested in solid companies during that crash, by 2013, you would have doubled or tripled your money. And let's not forget 2020, the COVID-19 crash. The market plunged over 30% in weeks. Everyone panicked, but those who bought into the fear saw some of the fastest gains in history as markets roared back in just a few months. The lesson? Every single major crash has been followed by a recovery and a new record high. Warren Buffett understands this. That's why he doesn't panic when the market drops. Instead, he sees it as an opportunity to buy valuable assets on sale, knowing that in the long run, the market will recover, just like it always has. So, while others are selling out of fear, you have a choice. You can either join the panic, or you can take advantage of history's biggest wealth-building moments. How to take advantage of a market crash. So, if history proves that market crashes are temporary, the big question is, how do you take advantage of them? Instead of fearing the downturn, you should be preparing to make your best investments. Here's how. 1. Think like Warren Buffett. Buy when others are scared. Buffett has a famous quote, "Be fearful when others are greedy, and greedy when others are fearful." Right now, people are panicking, selling their stocks at a loss. But Buffett? He sees this as a clearance sale on great businesses. Instead of running away, he starts buying because he knows that cheap stocks today will be valuable tomorrow. 2. Focus on strong, proven companies. Not all stocks are worth buying during a crash. Some companies won't survive, but others will emerge even stronger. Look for businesses with strong balance sheets, steady cash flow, and a competitive advantage. Think about the companies you use every day. Are they going anywhere? Probably not. 3. Use dollar cost averaging. If you're unsure about the perfect time to invest, you don't have to guess. A smart strategy is dollar cost averaging, investing a set amount of money at regular intervals. This helps you buy stocks at different prices, smoothing out the risk and allowing you to accumulate assets over time. 4. Keep a long-term mindset. Market crashes are scary, but they're only temporary. If you zoom out, you'll see that the stock market has always moved up over the long term. If you invest in quality companies and hold for years, chances are you'll come out far ahead. 5. Stay calm and take advantage of the fear. Right now, fear is everywhere. News headlines scream about economic collapse. Social media is full of panic, and many investors are making emotional decisions. But smart investors, the ones who make the most money, stay calm, stick to their strategy, and buy when prices are low. So while the world is panicking, remember this: market crashes don't destroy wealth, they transfer it. The question is, will you be the one buying or selling? If you found this video helpful, make sure to like and subscribe for more insights on making smart financial decisions. Let me know in the comments, are you buying in this market, or are you waiting on the sidelines?